Hello and welcome to my video. In this video we're going to talk about a company that you definitely know, but you may have not considered investing in it. This company has amazing valuation, this company has great financials, and most importantly it's almost no risk. So shortly about myself, I am a stock market enthusiast. I have been investing for many years, and for the past 7 years I have been outperforming the market. Usually I go for high risk, high reward companies, but this time it's different. This time the company is almost no risk, and it's such a good deal that I couldn't miss it. And at the end of this video I will tell you if I am buying this stock and if I own this stock. So the big reveal is PayPal. PayPal and its brands, Venmo. If you're from the United States, you definitely know Venmo. And yes, the reason is valuation, balance sheet. So let's start with that and continue with Venmo and other brands later. So first, these charts are for the last 3 years. This is earnings per share. As you can see, it's growing pretty consistently. And the bottom is price to earnings, PE ratio. And what you can see that there's a disconnect between the two. The stock price isn't following earnings per share, and the valuation, the stock is getting cheaper and cheaper and cheaper. And how cheap do you want to know? How cheap is 14.5 price to earnings? That is, by the way, when I'm recording this video at the end of the May. The fintech sector overall average is about 38, 39. So, why is PayPal valued like a value company? Why is it so cheap? In my opinion, it's not right. So let's continue. Here it is, cash flow, free cash flow for PayPal since 2012. And free cash flow is the most important metric, maybe with some crazy exceptions, but it's the most important metric that a company has. The company's sole purpose is to make money, and free cash flow reflects that the best. Free cash flow is growing, making PayPal a beast. PayPal is literally printing money, and it's printing more and more and more and more and more. And that is a great sign. So what is PayPal doing with its money? Currently, they have one of the best share repurchases, stock buybacks in the market. They are printing lots of money, and not only I believe that the company is really attractively valued, but PayPal thinks so as well, and that's why they are buying back shares. They're rewarding their investors, and they're reducing the amount of shares that are available, which is a constant upwards pressure for the stock price. And let's look at just how extremely large these buybacks are. These are not years, these are quarters. They are buying 1.5 billions this quarter. 1.5 billions, while their market share is only 80 billions. In my opinion, that's extremely large proportion that they are buying each quarter, and they're going to continue to do that. Because why? Because they have lots of cash, and they are deciding to spend it that way. And that is massive reason why PayPal stock has a limited risk overall. as we discussed before, PayPal is valued like a value company with a PE of under 15. PayPal is also acting like a value company. They are repurchasing the stock in massive amounts. They are extremely good value deal, but I believe they have some growth potential as well, which is why it makes PayPal such a great investment. As I said before, PayPal owns Venmo, and if you're from United States, you definitely know Venmo. It owns Xoom, it owns Braintree, it also owns Honey, which was the browser extension that was recently in some drama because it was stealing data and making unethical decisions. But whatever, business is business. We're here to make some money. They didn't do anything that bad, by the way. The drama was some partnership with YouTubers. Whatever, it doesn't concern us. So let's first look at this chart. Does this chart remind you of a value company? No, it reminds all of us of a growth company, and this is Venmo's revenue over years. As you can see, the growth is pretty great, and if the company had growth overall like this, you wouldn't have a P/E ratio of 15. And yeah, that some part of PayPal's business is growing massively, even though the rest of the business is already so mature that it's making lots and lots of cash, it's printing all the cash and rewarding their investors. And the revenue is growing like pretty much 20% year over year currently. And I'd say that's excellent. So, another part of the business is Braintree. Actually, if you know the YouTuber Brian Johnson, he was the one who founded this company, and it got later acquired by Venmo, and then Venmo got acquired by PayPal, and here we are now. This part of the business is also growing pretty nicely. As you can see, these are total payment volumes, and these are transaction revenues. And total revenue is growing nicely. Maybe the year over year line, as you can see, is downtrending. But let's be real, nobody expects this part of the business to grow 40% year over year. That would be a little too much. I'm not expecting that. And next part of the business is Xoom, or however you pronounce it. Now, it was actually extremely hard to find any signs of this part of the business growing for the past decade, because it isn't. It was pretty much forgotten about. It wasn't even mentioned for multiple years on earnings calls. And lately, the new management is addressing this, and they have plans to invest in this part of the business, and who knows, maybe something comes out of it. But I don't have high hopes for this, and this is not why I'm buying this company, why I would buy this company. And let's not think about Xoom, let's think about other things. Now, let's zoom out a little bit. I'm sorry. Let's think about this more fundamentally. In Europe, in United States, in Australia, in developed countries, the digital payment market share out of all payments is already pretty saturated. And there's no reason for it to expand much. But my thinking is, globally, let's say India, let's say whatever, Saudi Arabia, Africa, whatever, has massive potential for digital payment market share expansion. They have massive potential for any payment increase potential. And the message that I wanted to say is PayPal is much more diversified globally than you think. It isn't focused only on United States. For example, I live in Europe. I bought something from a Danish website just a couple days ago, and I was making the payment through PayPal. Another example, my mother was visiting Norway and somebody wanted to wire her money, and Norwegians have their own app that they send money to each other. And the best way for her to receive money without having this app was through PayPal. And it is just an example of how deep the PayPal web of diversification goes. PayPal has a massive potential to capture lots of market share all over the world. And I do not believe that they are at the point of their company's cycle where they're just gonna print the money, just give it all back to investors, to shareholders, and just chill. No, I think that they have room to grow as well, fundamentally. And by the way, this chart is not something I vouch for. This is not some projection high level that is gonna be the truth, but let's be real, it's pretty certain that the digital payment global market is gonna expand and expand and expand, and it's probably gonna expand even more than 10% a year. So, in the end, PayPal stock has almost no risk because the price is extremely low for them, for the company. And the company itself knows that. They are repurchasing massive amounts of shares. Even if you value this company as a value company, it's a great deal. But it also has some potential for stable growth. And it even has some potential for some parts of the business for exponential growth. And to me, it's an amazing deal. And yes, I own this stock. It's like 8% of my portfolio, and I lose absolutely zero sleep at night about this company. You just buy this company and don't think about it. After many years, it's gonna be higher. And I can vouch for that. So if you found this video helpful, start researching the video yourself. This is not a financial advice to buy it. This is a financial advice to research yourself. And another thing, like the damn video. Bye.